Hello everybody, welcome to my channel, back again. Now I will discussing again my trade on 30 September 2022. This is the last day of my 30 days experimentation, and there is always two sides, the good thing and the bad things. Okay, the good thing was the trade is going well. I'm following the rule, 3 trades each session, each day, and there is no extra trade, or it's some kind of impulse trade. Okay, but maybe some kind of impulse trade on the session itself. It's there. Okay, so it's also happened there. So it's like doing 3 trades in the small time spiration, what is called, in the small timing. It's like it's only 2 minutes and you do another trade and you do another trade. So this is also some kind of impulse that may also apply in this kind of session. So there is the good thing. The good thing is that the session is done, and the bad news is that the amount goes to 5 now, 5.80. So imagine we start this experimentation of the safe entry point from week 1. So week 1 we start from 25, you see, $25.48, and at the end the result was $5. So we lost about 19, okay, $19. But at least we're not blowing the account. Okay, and who knows, for the next continuation maybe it's going to blow again, but we have to learn a lot from this kind of data. So that's the trade, guys. So here I wrote about, not I wrote, I put some power here, profit power. This is my profit for power at the last week, 27%, which is the loss power is greater. And now let's see from the start, guys, from the start, or we can discuss this another time. Okay, so I will focus to this kind of entry point, because else I will doing some looping and talking in everywhere. So this is the first trade, okay, that I'm doing, which basically basically is nice. Let's see in this kind of description that I make. What is this? This is here. Okay, the clue, the most significant clue was what I'm doing there is basically waiting a retracement of reversal pattern. Retracement in form of consolidation on minor up. So only a minor up, guys. That means the major is still down, and from the great quality of trade, this is not so nice. Okay, because why? Because we against the major. Okay, but I think this is part of my habit that's still not completely erased from my memory. So I'm keep doing this, and this is has to be eliminated, not eliminated, because the memory cannot be erased like hard drive, but it has to be understanding. Okay, understanding that this is not this is the wrong way. But This can also be done in the correct condition context, which is you can drive the minor uptrend only if the context was ranging. Okay, so you cannot drive the minor if the context was strong down. That is a suicide mission. So, but this last trade on 30, I think I just doing recording. Okay, I find some method, I think, that make me keep in focus, but I don't know what is the result in the next month. Okay, so the next month it will be some kind of like this. I will use this strategy on the 30 September, like this one, which is I'm keep talking. Okay, I'm keep talking following the price, and I'm just talking with the analysis and then entering the trade, just like that. So with the talking, I feel some kind of focus, because when I'm talking, my brain is on that topic. Okay, on that focus, not somewhere else. Maybe it can eliminate the blank situation when you trade and you wait so long and you just get bored, and then it's just disappear. The analysis is just disappear, and we just take one point, like only based on candle, only based on SNR, support and resistance, and we do not mix the context, do not mix what happening in the condition of the market. And that is why it's keep losing. Okay, and I realized that this is some kind of like that, guys. It's some kind of bored in here in the psychology. So again, do not you see, the focus is out now. I'm not talking about this, and I'm talking about something else. That's what I mean with the focus that is not under control. So let's focus on this. Okay, what is this? So basically, in the first expectation, that I'm expecting that this will be the last of a downtrend, and this is the reversal pattern. You see, bullish engulfing, but I know that this is the major, so we still in the position of against the major. I believe that will be some kind of retracement, has a probability here. And then what I see this candle. Okay, I'm not sure with that candle because I want to enter here, and then you see it has a little gap. So when we against the major, we have to be careful with the gap like this, because you see, bam, it can close the gap here with the weakest candle. Okay, and the most important thing that I understood here from this experience, that this is a retracement. Okay, but this retracement is in the form of small consolidation, guys. You see, bam, what is that? There is a reversal, bullish engulfing. Or you can took like this, 3 candlestick. What is that? This is the morning star. It could be because the morning star is also something like this, sometimes a bearish doji. And that is why, okay, that is why this kind of consolidation happen. Because why? We expect the bullish engulfing to be bullish, but the major is still have a pressure down. So what it mean? There is no uncertainty here. I'm not sure that it will be a bullish one, because the major is still against us. Okay, so this candle happen. What is this candle? We have to know that this candle has a nice probability of, okay, broken down or doing something like this. Okay, this is a doji. That also means, first, the failure of this, the failure of the engulfing candle bullish, because it's not making a bullish one, it's making a doji. That means it's failed. Then the greater chance to go back here, I don't know, but here was it could be also the consolidation small like this, and I'm just wait for the next candlestick. I'm just wait that this candle is not broken in the second candle, okay, because else it could be also doing some kind of consolidation around here. So I'm waiting for this one, and this was happened, and then I'm happy to go a call option here, basically with the some kind of safe entry. So this is the nice entry. I'm doing call option in some kind of consolidation. Okay, this is consolidation, everyone, including me. Okay, this is consolidation, but the consolidation is based on retracement of reversal pattern. So the retracement is a consolidation, it could be like that. And after this, okay, after this I want to do a call option here, but I'm not doing that because of this consolidation probably. So you can see in the live chat, in the live trading, I'm just talking here. So that is the first one. So this is nice because we understood that the candlestick was in some kind of ranging. So this is some kind of ranging, not a downtrend. Okay, now we may learn that why this is ranging. Okay, even this happened, we have to find a sign that here, somewhere here, okay, the sign of ranging is happening. What is that? Okay, now I realize, not I realize, some kind of sense that you see here, this candlestick. What is that? This is the breakout, this is the retracement, strong candle breakout. This is the breakout candle. So the breakout candle will lead for another continuation here, but I'm not sure this is will be a bearish, okay, because this is too deep. Okay, it's already on the deep support, so I'm not doing any trade in there. So what happening here after the breakout and the continuation, it's not happen again a bearish. So that means the lower high, lower low, it's fail. When the higher high or higher low is fail, or lower high lower low is fail, that means the potential of ranging market is there, especially when you have some kind of reversal pattern. So that is why from here basically we know that the possibility of ranging is there because of this failure. Okay, only that I can see how to read the ranging process will happening, but this is the probability, so sometimes it's not happening too, but we have to aware of the next data that the candlestick provide. This one, okay, lower high lower low, it should bear, but it's making bullish, so it's fail. A fail of this technique, that means probably the trend was going ranging, consolidate, something like that. So that is why waiting for two candle, and let's see what I'm writing here, where it was here. Okay, so why it's profit? Because of ranging market, of course. Minor up start by bullish engulfing. Okay, bullish engulfing need two candle retracement in form of small consolidation on 61.8 as base support for continuation. Sign of ranging minor was the failure of lower high lower low breakout, that resulting bullish reversal in the zone of 61.8. So maybe I missed this one also. For ranging happen, it has to be a strong or significant level like this one. Okay, because if this was a reversal, that this means a fake breakout happened in some kind of significant level, and that we have to know about. Why this candlestick is consolidated here? Because of this level, that this is confirmed ranging and the price cannot break down the 61, so it's going up. Okay, that I think I'm just learning about it, and I'm not I'm still not a pro, but it's something like that I can tell you guys. So let's move to number two. Okay, now this is looking like same like before. Don't you realize that this is the same one like before? Okay, what I see this one. I'm sorry. I see this one, guys, breakout. Okay, so after the breakout, retracement. What is this kind of? This is ranging. Start from here, we can know that this is will be ranging or down, strong down. There is only two options. Why the rally, base rally, this is the strong pattern, it's fail. Okay, why the higher high, higher low, it's fail. Why the lower high, lower low, it's fail. It's a sign of ranging, a sign that doesn't mean it's the next will be ranging. It could be also the breakout or a consolidation here. Okay, who knows? Price consolidate, price ranging, or even price down. But there is how the best way that I think that I know how to read a ranging will start it, have a probability to start. Okay, because we don't really know what is the next exactly. And I'm sorry. All right. And when I see this, what is that? Okay, I know that this is the pattern of the strong. What is that? Drop, base, drop. This has to be down, guys. This has to be bearish. But why it's fail and making what exactly? A reversal pattern. What kind of area that it's cross? Level 76.4, and here was 61.8. Again, the previous level here, 61.8. But okay, we have the same kind of feeling like before, like the first entry. Okay, and then here what we do not entry. Why? Because we against this measure, so I'm not entry here, I'm just waiting. Again, it's making a doji. Okay, it's look like the same like before. It's the same scenario, guys, but the next is the key. Okay, that I miss about the concept. So it's a doji. Okay, so what could happening here? When the candle is doji like this, even it's bearish or bullish, there is three things can happen that we have to know. It can happen breakout, it can happen consolidate, it can happen breakdown. Okay, and one thing, it can happen like this, a consolidation that make a fake breakout. Okay, so this is a small consolidation that make a fake breakout inside of the consolidation. How many things after this candlestick? Okay, after this, going to this, what is this? Bearish hammer. What is the bearish hammer? Bearish hammer is of course a continuation, because this is in the following of the major trend. Okay, and the market is still ranging. But if this was a consolidation, then it could be also a bullish one here. But the problem was there is no level significant here. The level significant was down 76. Here was like 77. There is no level here in there. In most cases there is no level in there. So what I'm wrong here? here exactly I'm doing the same like before, waiting for this, expect this was a consolidation and expect the next candle will be bullish, so I enter here. But exactly they bearish. Why this bearish can happen? Because the consolidation only respect on support and resistance. Alright, so there is no level around here, so there is not respecting a support, and there is the important thing was this gap. Okay, this gap is very crucial, especially when the candlestick was a little like strong here, like bearish hammer. Follow the major, follow the minor. Okay, but maybe this is not against the minor because this is the minor up now. And what happened? Bam, bearish hammer again, closing where? On the 76.4, and that's make me lose because this is a consolidation. This is the retracement in form of consolidation, and the support is not touched yet, and there is a gap with the significant candle. This is the suicide mission to do call option here, where we should do a call option here. Okay, and the next I just doing a call option because I know that, and not I know, because I some kind of know the probability that this is a retracement in form of consolidation, but it can manipulate us like this. Okay, we expect that this is kind of consolidation small here, but in between of what we don't know. This is no level here, the level was below, so the price is going down below, and this is kind of 3 candle retracement. And now we have to learn here that 2 candle retracement in most cases it's a retracement in form of consolidation. 3 candle retracement is a retracement candle in form of consolidation, and it's happening mostly against the major trend. You see, against the major trend. This is the second one. The first one against the major trend. The first one is about around here. So that is the thing that we can learn from this kind of situation. But you see, it's again of risky, right? If we think that why we not here, why we not here, why we against it, that is the problem of psychology. And I think that is why still not consistency profitable trader, right? Because we know we have to follow the minor trend and the major trend, but it's only in the words, it's only in the mouth, it's not in the subconscious. Now the problem is how we can put this kind of scenario in our head. Okay, maybe that is in the psychological lesson, but let's say like that. Okay, just let's say that we have lost here, that we just not get enough information. Okay, it's not a mistake, sometimes it's working like that, but we know now that why this is bearish is because of this gap and because of this consolidation, because the scenario of consolidation should be a doji like that, a doji again, a doji again. It can be bearish doji, bullish doji, bearish doji, or it can be like this, like bullish, bearish, bullish, bearish, bullish, bearish. It's all a doji. Okay, a doji. This is a doji. That is a consolidation, and the most important thing on consolidation is like this one, is that they make something like this, bearish, bullish, and then bearish breakout, and then bullish again, because it's want to make a doji. It's want to go back, because the consolidation is always go back to the opening. Okay, that is, guys, the second one. What we can learn, that be careful doing a reversal that against the trend. So that's the point. Against the major, if we have reversal, we have to wait even 1 second, and even the last is third. Okay, this is when it's fourth, this is going down. It's not, it's only the limit of the retracement was 3 candlestick when it's against the major. When it's follow the major, that means the retracement is only 1, 2 is the max. So maybe 1 is the max, 2 is not, because 2 is also against. I mean when the major was up, the minor was up, so the retracement has to be only 1, because the neck has to be bullish, because it's follow the major. But if the situation was like the major is down, the minor is up, that means that the high probability that the retracement happen in the 2 candlestick doji, or something like before doji, and then bearish, and then back. Okay, and then even 3 like this. So be careful. That is the mindset that we have to gain in this kind of error, in this kind of mistake. So that is the second, and the last one is the next candlestick. Is very huge. Why this candlestick is huge? Because of this context. Okay, so we have to know now that the context is ranging. What the sign of the ranging? Okay, we know this is the strong pattern, rally with rally. It's fail, that means the sign of ranging. And we know drop base drop is look like the same, right? Drop base drop, rally base rally. It's fail, okay. So in this kind of area is dangerous, it's very dangerous. But make sure that in the ranging that we have a price close exactly, and it support with no gaps and no significant candle that we have to against. When we see this candlestick, a bearish following the major, why even we think that we can make a bullish here? We against the one candle, we against the major the major trend. So that it was. This is the last. The last was nothing to say about. All is already explained in the second trade, that this is because of this retracement in form of ranging. Maybe this was a channel, right? In the small time frame, like 5 seconds, it's like channeling. And now the question is why this candle is big? Because of the context and because of this significant candle. You see, this is doji, this is hammer, this is significant, that it has to be broken by a strong force, and a strong force in the ranging market will resulting a big candlestick because it's volatile. Okay, thank you guys. And maybe I am not reading this one because okay, just reading the third one. So the third one is understand the closing price on consolidation as a support, right here, support on consolidation, micro consolidation. So why is profit? Because of ranging market, minor up start by bullish engulfing. Okay, bullish engulfing, then need 3 candle retracement in form of small consolidation, back on 76.4 with gap or space, fill it up or close the gap. So this is the, when you against the major, there is the chance if a gap has to be filled up, and then the reverse will happen. So thank you guys, I hope you enjoy my video, and bye bye.